Hello, is the market correction over now? Are you wondering if now is the right time to strike?
Go big or go home.
Let me ask you this. If you see Gilat the way I see Gilat, which I think is a blockbuster company in the making that will ride on the 5G and space satellite communications market boom all the way to the moon, then the current price of $12 is disgustingly cheap. We're gonna drill into the fourth quarter highlights and the recently released annual report. I'll also share with you my discounted cash flow model, which is showing me a 6x potential for Gilat at its current undervalued price. Stay tuned. You cannot afford to be in the dark on this stock. For those of you new to the channel, I am the Simple Trader and I share with you EPG stocks. Yes, explosive exponential potential growth stocks that I am buying, looking to buy, or already have sitting in my freedom portfolio. I am not a financial advisor, so please understand this is all for entertainment only. In this video, we won't be drilling into the company itself and what they do. So if you do need a full drill into Gilat to understand about the company, then please check out my previous videos with links in the description. Okay, no more plugging. Let's start drilling. Gilat stock hit an all-time intraday high of $22.69 on the 10th of February. Since then, the stock has sold off to $15 levels quite aggressively following the first stage of the market correction, and then further sold off last week to hover around the $11 mark. This is a massive 50% decline from the all-time high. Now, if you like the stock and are looking to buy, but you're wondering, is this the right time to strike? For me, simply put, yes. But you do need a game plan, and you need one that is going to work the best for you. For me, I see this as a 1 to 3 year hold at the very minimum, so I would get in at any price I'm comfortable with. Example, if the stock is exploding up 10+% right now, I would let it cool off and look to buy in on a red day instead. I like to think of it as going shopping. If there's a run on toilet roll, it's probably best to hold off until the manic people have left, so you can properly assess the situation and whether you need to buy the toilet roll right now, or wait until another day when the supply is so high that they have to put it on sale. For me, there is a simple mentality to use for any type of trading, which is never to chase a stock that is popping like a volcano, because volcanoes are hot and you will get burned. Remember, there will always be another day you can load up, or there will always be that other stock that you can invest in. It seems that Gilat just cannot go 2 weeks without a new contract of some form. On the 10th of March, Gilat was awarded by Telespazio, and I hope I didn't butcher that, a contract to supply enterprise connectivity in Brazil for a multinational leading energy company. Telespazio is a joint venture between Leonard and Thales. Gilat will provide the satellite network and thousands of VSATs, yes thousands, to energy plants of Brazil's largest private sector energy company. Now who could that be? Enel? Okay, balance sheets are not the thing you typically want to read every day, but figuratively speaking, they represent the health of a company, and they will provide you a snapshot of past trends that can help you forecast where the company is likely to go in the future. They should form part of your investment deep drilling for every investment. Here, let's just keep it simple. First, I want to highlight some of the CEO's remarks in the Q4 results release, and that is, Gilat made some major technological achievements and closed some significant deals that positions them very well for 2021. And he highlights the wins in growth areas for cellular backhaul and NGSO, non-stationary geosatellite orbit. How more bullish can you get for an outlook moving forwards into 2021? Well, yes, you can. He further highlights the multiple managed service deals that will provide significant recurring revenues. This is associated with 5G, which is going to be a huge growth market without question, and they basically have a massive $50 million contract potential in the pipeline. Okay, let's take a look at the audited SEC filing for the annual results balance sheet. So we can see a decline of revenues for 2020 from 2019. Products basically fell 50%, and they do go on to give the reasons for this, and we can basically guess the main reason was the pandemic itself. Now, the services revenues were basically the same, meaning its customer base was still using their services. The interesting thing is the earnings per share for the full year of 2020 equals 63 cents compared to 65 cents for 2019. This is huge, as it shows that they somehow maintained income, even though 2020 was just a wipeout year. Of course, they had net income of $53.6 million attributed to the settlement with Comtech, but do note that in 2019 they also received a $15.5 million tax benefit. Of course, with reduced revenues in products, we do see the cost of the products decline too, but it's a bit worrying for me that the cost is so high compared to the ratio for the previous year. Why? Simply put, I think it's down to their new product lines and development. When we go through the rest of the items, the only major differential is the tax benefits, which then pulled their earnings up as compared to the previous year. What is interesting is if we see the trend of the earnings per share from 2016 when it was negative 10 cents, it is pretty much growing exponentially each year until we hit 2020. This for me is a very strong indicator that the company is profitable and becoming more and more profitable until it was hit with COVID. The geographic distribution of their business shows me one thing, and that is they are well diversified and are heavily deriving revenues from Latin America, which is one area of significant future growth for the coming years ahead. They have lots of cash too. Okay, one reason why I think there was an initial sell-off after the Q4 results were released was the fact that I think the recent contracts won may not have been fully reflected in Q4 or even the 2020 full year results. Actually, I'm pretty certain when I list the major contracts and compare it to the reported revenues, there is a big discrepancy. A lot of the contracts are noted as multi-million-dollar contracts without giving a figure, but the two contracts that we did have figures for equate to 20 million and a 15 million price. These seem to be purchase orders rather than service contracts, which could span years. So, in theory, I am expecting Q1 or Q2 results to pop based on the revenues that these two contracts will generate alone. I did do an estimate on the contract sizes based on previous similar contracts, and you can see the potential revenue I estimate could be over $230 million, which, if this is anywhere near, will be huge for 2021. And remember, we still have 9 months to go. Now, on this channel, we don't normally go into the technicals, but what I want to share with you is after I have ran my own models, I strongly believe that Gilat is hugely undervalued and misunderstood, and especially so after the market correction. So that is the reason for showing you a component that forms part of my bullish thesis. Okay, you may know about discounted cash flow models or not, but simply put, for me, they are a useful tool only to gauge and help with your overall bullish thesis. I don't put too much weighting on intrinsic value, as they are certainly to be wrong, and especially when we look at explosive exponential potential growth stocks. Okay, here is my model, and I don't want to go into too much details of how it works, but simply put, we first take the cash flow as reported by Gilat for 2020, which is $43 million according to Morningstar. Next is where all models will differ, and that is your own predicted growth rate. Now, you can use growth rates provided by industry experts and analysts, as they call themselves, on sites such as FinViz, but I prefer doing my own due diligence and coming up with my own figures. In this example, I take the previous 4 years average growth rates, which comes to 44%. Considering I think Gilat is set to explode with 5G, the recent contracts, and the world moving forwards with technology, I put a 40% growth rate for the next 5 years to come, which for me is pretty conservative enough. For the following 5 years, I expect this could halve as the world becomes more technologically suited and the growth rate slows down. So even with the possibility of something better, so I assumed a big discount growth rate dropping to 10%. I won't go into the other factors, but the result that comes out is an intrinsic value of $75 without any further safety margin applied. This implies on current price of $12, the stock is seriously undervalued and has a potential upside of over 6x. Remember, as I said, these DCF models will always vary because of the nature of predicting future growth rates. So these models need to be consistently reviewed for them to have any impactful long-term meaning. That is why, as I said previously, these only form a small part of my overall bullish thesis. To summarize, my bullish thesis on Gilat remains extremely strong. Ark Invest remains invested, and we still have the potential ARKX inclusion to look forward to. Based on my discounted cash flow model alone, I can see 6x potential as the minimum based on current price. As I said in my previous video on Gilat, this may become one of my larger positions in my portfolio, and guess what? I have been loading up more shares during this correction. Thank you for watching, and remember, I have a position in Gilat, so do take my analysis this with precaution. Do your own due diligence and speak to a professional before you look to invest any of your money. If you are interested in other huge growth stocks that I do have in my portfolio, please check out my other videos. For more huge growth stock picks, analysis and updates, please stay tuned and consider subscribing to my channel so you get the information first. I am the Simple Trader. I tried to keep this simple and will simply see you next time.